CPI data just came out this morning, came in at 8.5%, which is lower than last month's 9.1% and lower than the expected 8.7%. So, of course, what happened in the markets? The markets skyrocketed. The Nasdaq's up 2.5% last time I checked. It's been up all day. My personal opinion was I thought it was going to jump up in the morning and then come back down when people realized it's still high. So, where was it changed? This is the link from the actual Bureau of Labor Statistics here from the government. So, biggest thing, energy down 7.7%. Gasoline prices are down below $4 a gallon, and yet overall inflation was still high. So what does that mean? Well, guys, again, it reminds us that short-term gas prices, they were going down and down and down. The month overall ended up falling, but it's still high compared to historical, and it's still driving up prices for other things. Why is that? Well, it takes gas to go ship food, and those prices that were paid for food was still factoring in the previous gas prices. Does this mean we can see a plummet in the future? I don't know, and nobody knows. All I know is that we have much higher inflation than we did over the last 20 years recently. That's going to be a problem for a while. Interest rates being raised will help fight that. Why? Because as interest rates go up, there's less demand for loans and things like that spur the economy. We still have low unemployment. Low unemployment drives up prices. Why? Because business owners have to pay more money to get those people to come work for them. And there's still twice as many job openings as there are people that are unemployed looking for a job. These are all inflationary measures. Unfortunately, you can't have your cake and eat it too. You're not going to be able to it's going to be very difficult, I should say, to have low inflation with low unemployment. We've had it in the past, but for probably a myriad of reasons. Historically, the U.S. will want 5 to 6% unemployment, which means about 2% increase from today, which is a 66% overall increase in unemployment numbers. That's a lot. So if you're new to this channel and you're checking me out for the first time, I'm Paul. I'm a value investor. My goal is to look at the data out there and understand it fully to paint a picture for me. I'm not trying to guess what's going to happen week to week, day to day, month to month, or even year to year. My goal is to make investments based on long-term perspectives. If I see things, like I look at inflation here. Yes, inflation's high, but I don't believe it'll be 9% for the rest of the time. That's the key here. And if it is 9% for the rest of the time, I feel that over time, things will even itself out and I'll be able to make good money in the long run for it. Your goal as a person watching this video is to always live well within your means and save your money. That way, when things like this happen and there are increase in costs associated all the way down here, that you can sit there and easily afford it. Yes, you might take a step back in how much you might have to increase how much you spend temporarily, but over time, your income will adjust and your savings will adjust. Over time, this is what we're looking to do. I'm not the person that's going to make guesses in the short run. I do make bets on long-term perspective, things like where stock prices are. I believe stock prices are too high. I believe this high inflation, as it causes interest rates to rise, will cause stock prices to go down. Why is that? Well, interest rates work in terms of boosting up stock prices and keeping them down, because as companies borrow more money, if interest rates are down, their net income is up. In addition to that, if the S&P is paying a 2% dividend yield and you get a 10-year treasury paying you 1.5%, you sit there and say, hey, might as well invest in the stock market. These things all work together. The more you understand, the less you will fear. That's something I learned very early on in my life, and I was very fortunate to. But I was like everybody else out there at some point. I followed hype. I cared about guessing what's going to happen month to month, week to week, quarter to quarter, year to year. And then I realized that life wasn't as fun that way. Because if I was wrong, my investments blew up, and I didn't like that. I wanted to make investments based on long-term perspective so I could understand more how an investment was driven over time. Because if I understood that more and believed in my process, it would lead to better results. This CPI data is talked about non-stop in the news, and I just chuckle about the whole thing. Yes, I know I have means, so therefore it doesn't affect me as much, but you can too. Living within your means is not a matter of income. It's a matter of mindset and psychology of how you view money. This is all that matters. I'm trying to teach people on this channel that the way you look at money it doesn't matter how much money you make. If you have a positive look of money and a positive way of processing your money, you will do well no matter what money you make. Every billionaire out there started broke, basically. They started with $0 and built it up. That's no different for you. It's all how you view and manage your money. And this channel is dedicated to that. So inflation isn't as big on my mind in terms of the short run as other people, but something I do keep attention to, and if you've watched our videos before, you've seen me talk about it, Consumer Sentiment Index. It's at the lowest level, besides June, that it has been in history, even lower than 9/11, COVID, financial crisis, 1982. That is concerning for me. Why? Well, 70% of GDP is consumer spending. And the Consumer Sentiment Index literally surveys people about how they feel about the economy right now and how they feel about their spending in the near future. These are if all of a sudden 70% of GDP is consumer spending and people decide to pull back by 5%, that's a 3.5% drop in GDP. We've already had 2 quarters in a row of drops. So this consumer sentiment is kind of concerning for me. Now, am I going to change the way in which I invest based on it? Not personally. I'm trying to help you learn that this should not be looked at day to day. You should look at things from a long-term perspective. In the last few years, the long-term perspective on stocks has not been good. That's been very much against what the normal market's saying, but I want to help teach you the value investing mindset of being patient and trying to buy an asset for less than the market says it's worth. If you like what I'm saying here, subscribe to the channel and watch this next video where we talk about recessions are an opportunity of a lifetime. Thank you very much for your time.